Suneeta Reddy, the MD at Apollo Hospitals, joins in on the show right now. Ms. Reddy, what was the performance that you incurred in the second quarter? And in particular, if you could break it up as to how the matured hospitals did, because it seems that they continue to grow in double digits.
Yes, let me start by saying overall standalone revenues grew by 18% to 2,464 crores. Our EBITDA grew by 19% to 308 crores. Mature hospitals, especially the Chennai cluster, grew by 14%. And EBITDA margins in the mature hospitals are now at 22.1. On the whole, for healthcare services, we're at 18.1. And we've dramatically improved the EBITDA margin for new hospitals as well, from 4.7 to 8.4.
Right. What about margins overall? Because they also did well. Do you think that you'll be able to continue with this kind of margin expansion probably for another 4 to 5 straight quarters?
Yes, we do. I think it should get better, because we're also focusing on some cost-cutting activities. So we do hope that the entire hospital margin moves up to 21-22%.
Reddy, at the end of Q1, the management had said that they expect mature hospital revenue growth of 10% and new hospitals to continue their growth momentum. Is this on track, and what is the trajectory?
I think, we've shown growth of 19% in EBITDA, and that should be the guidance. Healthcare services growth of about 15%, pure healthcare services. You should see EBITDA growth of 15 to 18%.
And given Apollo's heavy expansion phase now has ended, how did the new hospitals do in the quarter? Was there a visible turnaround?
Very much visible. Like I said, our EBITDA margin has almost doubled. It's grown by 200 basis points. So clearly, it has been a very good turnaround. All the hospitals are in positive EBITDA except one. Navi Mumbai, for example, is at an occupancy of 200 on 230 beds and has come in this quarter with a 9 crore EBITDA. So the trend is looking very good.
What was the performance of the Navi Mumbai hospital? Did it continue to see positive EBITDA with better occupancy?
So currently on 230 open beds, we have an occupancy of 200. We have EBITDA of 9.1 crore for this quarter alone. So going forward, I think, we should close at a very healthy EBITDA. And next year, we can see an opening of another 50 beds, so an additional 25% capacity, and asset utilization and capacity utilization should pick up. And we've seen that happen over the group, because if you look at occupancy, we've actually moved to 70% occupancy from 68%. So there's been a good growth in occupancy. There's been a 10% increase in volume. And this has been reflected in both the revenues and the margins.
Okay, and what was the performance of the pharmacy business? Do you expect better growth there, as pharmacy has actually been quite a fast-growing segment?
Of course, I think pharmacy is growing at 23%. We've added 111 stores, so currently we're at 3,611 stores. What is more important is that the EBITDA has grown by 40%. So current margin has moved up from 5.4% to 6%. This has been driven mostly by the growth in private label, which has almost reached about 8%.
Right. Also, just wanted to understand about the two recent, event unfolding as well. Once the closure happens, do you think the former is going to improve the net debt as well as ROCs? I'm talking about the pharma restructuring, of course, and the Apollo Munich stake sale too.
Certainly, they will. In terms of net debt, we're currently at about 3,000 crores of debt. I mean, if you take out working capital, etc., we're at 3,000 crores. With with the pharmacy restructuring, and Munich, we should be at 500 crores. So that's a debt to EBITDA of 1 to 2.5.
And finally, what is the update on Aayushman Bharat? Do you believe that the sector as a whole is likely to benefit?
So far, I think the news on Aayushman Bharat is that we are picking up slowly. They have announced 262 new packages and discontinued about 300 packages. There has been some revision in the rates. We are actually waiting for the Quality Council to certify the hospitals, as they said they would, into silver, gold, platinum. And once that's done, I think the reimbursement will be very attractive. Volumes will certainly pick up. I believe that the private sector is doing 50% of the current volumes in Aayushman Bharat, average ticket size being at 17,000 rupees. And it is a huge opportunity for us to participate with the government and handle especially tertiary care procedures where we are very good with clinical outcomes.
Thank you for taking the time out and sharing with us your outlook for individual sectors as well as for the pharma space as a whole.